Good morning. It is Friday and we survived another week. And as always, it is Commodity Corner Friday. You know, the commodities have been really interesting, and I think this is another sign. We talked a lot this week about the bond market and how interest rates are at one-year highs. You know, we look at what's going on in the dollar. The dollar is gaining strength. So if the dollar is gaining strength, what does that mean for commodities? Well, commodities are all benchmarked against the dollar. So it takes less dollars to buy more commodities. So we can look for some pressure in the commodity market, which is why you're seeing the commodities such as gold. The gold had a pretty wild week last week, churning up and down, but eventually succumbed to some pressure. Oil is coming into a lot of pressure. The only commodity markets that are really moving in a positive direction are the near-term grain markets. And when we talk about that, and for those of you who trade grains, and even if you don't trade, it's important to know what's going on. Right now, there's what they call new crop and old crop grains trading. The old crop is the stuff that trades in July and August expirations. And then in soybeans, new crop starts with November, and in wheat and corn, new crop starts with December. So that's next year's crop. That's the planting and everything else. But what we've seen is that the old crop has been having what we call a short squeeze. They don't have enough supply to meet demand. And so what's happening is the markets are getting squeezed here. So although the new crop, or excuse me, the old crop is skyrocketing in price, the old crop is still selling down, which is telling you that there's really not a problem. It's just simply a short squeeze. But when we look at the commodity space and the commodity markets, they've been much weaker. So that's another sign that the markets are having a little bit of struggle here. Because alternative investments, that's when we have what we call the risk-on trade. So we have a stronger dollar, which is a good thing, but it's not a great thing for commodities. We have weaker gold prices, weaker silver prices. Okay, we've got weaker commodity prices in the out months. So this is telling you that there's more fear in the market, and because of that, it creates a potential deflationary scenario, which is obviously the worst of anything we could ask for is deflation here. As you watch some of these commodities start to deflate, that would be more of a scare to the market than some inflation. And we actually see if the Fed would raise some rates here and we could maybe create some inflationary times here. We don't want hyperinflation, we want just regular inflation. So the best economy is an economy that everybody can make money in. And if we can do that, that's what we're looking for. So, but we see the commodity spaces and we look for my usual Friday predictions. What we're looking for here is I'm looking for gold to be fairly stagnant, but possibly the downside. Look for probably a little bit of a rally in oil, but look for a spot to sell it. I think the short squeeze will end in the grain markets. And in the stock markets, I think that you want to look to continue to sell. I think that any reasonable rally, watch 1650, watch 1620. But I'm looking for the first real stop and pause in the S&P would be about 1580. But when it's all said and done, I'm looking for 1500 or lower. I'm looking for a 10 to 15% correction by the time this is all done. But that's the way I see it. Be nimble, be ready to react. For Friday, the Bubba Show. We'll talk to you next week. Have a great weekend. Good night, everybody.